Are you tired of waiting around for that yearly bonus or a profit that only shows up once in a blue moon? What if your money could be working for you every single month? Well, today we're going to break down 5 of the smartest ways to generate consistent monthly income in 2026. Let's get right into it.
I mean, it's a super common frustration, right? You're working your tail off, but those big paydays feel so few and far between. But the good news is, you can actually change that rhythm. You can build systems that pay you regularly, predictably, month in and month out. And that's exactly what we're going to map out today.
So our mission here, it's pretty simple. Build a steady, reliable stream of cash flow. This isn't just about chasing some one-time gain. It's about creating an income that gives you that financial breathing room we all want. So let's jump into our very first strategy.
All right, first up, stocks that pay you monthly. Now, this strategy takes a classic investment, stocks, and gives it a really powerful monthly twist. We're talking about a very specific type of stock that could totally change how you think about getting income from your portfolio. You see, most stocks that pay dividends, they do it every quarter, so 4 times a year. But there's this special class of them that pays out every single month. That simple shift in frequency can make a huge difference, not just for your monthly budget, but for compounding your wealth even faster.
And a perfect real-world example of this is a company called Realty Income. I mean, these guys have built their entire identity around this concept. They even trademarked the nickname the Monthly Dividend Company. It's kind of like owning a tiny piece of a massive real estate empire and getting your cut of the rent every 30 days.
Okay, next up is our second strategy. And this one's perfect if you think the stock market is, just a little too much of a roller coaster. Believe it or not, in 2026, some of the absolute safest places to park your cash are also offering some really attractive monthly payments, all thanks to the power of interest.
Yep, we're talking about high-yield savings accounts and money market funds. For anybody who puts safety first, these are totally back in style. Just think of them as the perfect home for your emergency fund or any cash you're saving for the short term. The bank is literally paying you a steady little thank you every single month in the form of interest.
And with interest rates staying competitive, the difference between a traditional old-school savings account and the high-yield one is, frankly, huge. We're talking about earning substantially more on your cash reserves month after month with basically zero extra risk. It's a no-brainer. Now, our next 2 strategies are all about real estate, but it's real estate reimagined. For decades, if you wanted income from property, it meant you had to be a landlord. Well, technology has completely changed that game, letting you get all the benefits without ever having to fix a leaky faucet. And this brings us to strategy number 3, real estate crowdfunding. This is a total game changer for making property investing accessible to pretty much everyone. You absolutely do not need a huge down payment or a massive mortgage to get your foot in the real estate door anymore. The process is actually incredibly simple. You just pick a platform, something like Arrived or Fundrise, you invest your share, and sometimes you can start with as little as $100. And then you just sit back and collect your portion of the monthly rent from an actual property. It's true passive income deposited right into your account. Okay, so our 4th strategy keeps us in the world of real estate, but we're going to take a slightly different approach. If you like the idea of investing in a whole portfolio of properties all at once, then you are definitely going to want to learn about REITs. So REITs are basically publicly traded companies that own or finance huge portfolios of income-producing real estate. So instead of owning a piece of one house, you own a share in a company that might own hundreds of apartment buildings or shopping malls. And if you want that direct rental income, you'll want to look for what are called equity REITs. And here is the magic number. By law, REITs are required to pay out at least 90% of their taxable income to shareholders in the form of dividends. This legal structure literally makes them powerful machines for generating consistent income. All right, for our 5th and final strategy, we're shifting gears a little bit to an asset class that's really known for its stability. If you're looking to balance out some of those wild ups and downs of the stock market while still keeping the cash flowing, this is a fantastic option to look at. Let's talk about bond ETFs. Now, an ETF, or an exchange-traded fund, is just a basket of investments you can buy and sell like a single stock. A bond ETF specifically invests in a whole collection of government or corporate debts, and it pays out the interest it collects to you, usually in monthly distributions. So why even consider them? Well, while stocks can offer higher growth, they also come with, as we know, much higher volatility. Bond ETFs, on the other hand, are generally much smoother sailing. They provide that crucial balance in your portfolio, helping you sleep a little better at night while still generating that predictable monthly income.
So, there you have it. We've covered 5 really powerful strategies. But look, information is only useful if you actually act on it, right? So the goal now is for you to think about which of these makes the most sense for you and for your own financial journey.
Just remember this, the real key to financial freedom isn't just about saving money. It's about cash flow. Building wealth isn't just about how much you can squirrel away. It's about how much income you can make your money generate for you on an ongoing basis.
So let's do a super quick recap. We've got monthly dividend stocks for those regular payouts. We have high yield savings for safe, interest-bearing cash. There's real estate crowdfunding for easy, accessible property income, REITs for those big, diversified real estate portfolios, and finally, bond ETFs for stability and flow.
So, I'll leave you with this question. You now have 5 very distinct paths you can take to start building a monthly income stream. The only real question left is, which one are you going to explore first? Thanks for tuning in.